Good morning, everybody. And we see a little pop, and we'll take it. And as I mentioned on NFP Day Wednesday, when the unknown becomes known, we get the shift in volatility, the uncertainty comes out of the chain, and we get the rehedging. Just like we said on Wednesday, the ghost of the machine, aren't sucking you in to trick you, to get you to buy, to short you, or whatever. This is all mechanical, what we're seeing right now. I don't know what the number was, if it was hot, cold, whatever. January CPI plus 2.4, 2.5 was expected, so better than expected. So that's, I suppose, better than worse than expected. Oh, I've got my Vatos Loco shirt on. You ever saw American Me? I think I'm channeling my inner LA gang member. Sure, I have to button the top button. Okay, anyway, I'm just playing. So here we are heading towards 68.50, and I made my post or free post today. I have kind of a practice when the market is acting crazy. If what I can do can help, great. We're all in this together. Okay, so quick review of yesterday, but I'd rather spend more time on today. But I think it's important to understand the context of yesterday. Okay. So yesterday, 1.5% move, pretty much 69.75 to 68.25 straight down, with a few stalls in between at key levels. Like I say here, we sliced through the 20 DMA, the 50 DMA, the CTA sell triggers at various market pundits and, Goldman Sachs or Citadel or Nomura or whatever have estimated. And it's in the 69, 10, 20-ish area. I'm going to call it the 20 DMA area. 6,900 gamma flip area. That whole area is loaded. So I want to talk about the VIX shorts. Okay, so we had a VIX gamma short squeeze yesterday. We had a VIX gamma short squeeze yesterday, along with a lot of turmoil in the macro bro space. Silver tanked, bonds got bid up, so flight to safety, rotation kept going on. The Sasquatch contagion of the AI destruction migrated over to the trucking industry. Somehow now the AI will disrupt the logistics models, and so like C.H.R. Robinson went down 25%. A lot of these truckers reported blowout quarters. They were up 5-10% on their quarters. Suddenly they're down 10-20%. So whatever. Reflexive dealer hedging loop. Spot fell and IV spiked. So let's get right to that, and we'll circle back around so that we make sure that we get this. I think the volatility stuff is important. This is market maker side. Okay. So let's forget puts and calls for a second. Let's just look at nets. This is market makers short, they have to chase. Over 17, which vol trade has been saying is the number. Market makers have to chase, buying VIX futures, VX, ladder up, Ladder up to 20. Oh shit, where'd we go? 20 yesterday. 20, a little stally right here, right here. If over 20, 22. When did we hit 22? About a week or so ago, we were up there. Okay, so market maker flexing hedging was just added to the turmoil that we saw yesterday. Something else that we saw yesterday, and I posted it in various places, and that was, I'm not going to attempt to go back because I might lose it, so to speak. So I'm just going to use this as an example of what happened. So yesterday, when we were at whatever it was in the 69.50 area, it doesn't really matter. I just want to show you the illustration. There were some large customer sold puts that were at 69.20 actually. And then we saw them closing. There was stuff at 69.20. We saw that at 6,900, we saw them closing. The big one is the people we call the 100 wide gang, which sell 100 wide iron condors, and they were down at 77.50. I forget where they were, 67.75. They closed 15,000 or 20,000 of them, removing that positive delta support and adding negative delta in an already falling market. So that's no bueno. And then we just kind of got the reflexive, whatever. And so here we are now. Now, I want to show you something else. I'm going to, so quick for the uninitiated. These are market maker long customer short positions. And so we have 6,800 to 6,810. So here's like your inflection point. And pretty much a two-way ladder between, let's just say where we were pre-market, 6,800, 20 area, kind of slowing on the way up to 50, 60, up to 75. Two-way ladder, anything could happen. Down below, we get into sticky market maker, long customer short bouncing. But when volatility goes up, these levels lose their sharpness. And hedging just kind of can slide through it, in addition to people closing them, rolling them, etc. Now I'm going to add something else. I didn't want to include this because I didn't want to make it so that you and me couldn't see the size of of some of these bars that were local. So if we just go 69.55 and 6,700, you see where the real action is. The real action starts down at 67.60 all the way down. So we got 67.50, 20,000 puts sold. If they buy that back, could look ugly. If it stays, it could bounce. So a lot of this is going to depend on what happens to volatility and to what these large position holders do. Yesterday, they ran away. When they did, that just added to the sell-off. Do they run away today? I don't know. And up on top, we have how much? 69.50, a bunch sold, not nearly as much as this, but significant. So if I just kind of change it so we can get a little bit of a view of proportionality, and kind of let's trust our eyes a little bit. And we'll just make it 67.55. 67.55. So big zone 60 to 6,800, big zone 68.10 to 68.75, another zone 75 all the way up to the moon, 69.50. And those are the zones that are in play today. quick look at the VIX decomposition index. And what this tells us, there was a little bit of a reach for downside convexity, a little bit of a reach for upside convexity. Skew went up, but a lot of this was sticky strike, parallel shift. And so in my Discord, yesterday was a liquidity squeeze and margin call, signaled by silver. That was what I think. By the silver drop. VIX decomposition confirms this IMHO. I don't know if you can read it. The move was 57% sticky strike, sliding down the skew at 29% parallel shift, broad deleveraging, without a lot of reach for tail convexity. At the same time, folks, so they weren't reaching for more hedging, just everything got repriced, everything just moved around because of the dynamics I was just talking about. I think I got dragged into the VIX macro bro space, or the VIX whatever space. Okay, so let's look over here. These don't update great, especially the VIX 9-day. But what we saw yesterday, I think I got it in my notes. So I'll give you the numbers so I don't have to make shit up. And I made my daily plan free today, so anyone wants to subscribe to Substack, they can get it. And this is what my paid subscribers get. So if you're interested, do the old like, subscribe, all that stuff. Let's do media assets. There you go. And the link should be down in the description somewhere. Okay. So Thursday, VIX was up 18%. The VIX 9-day, the short-term VIX, was up 39%. And the VVIX was up around 10%. So front-end fear. And we have expiration close on this week. Wednesday is expiration. Tuesday is the last day to trade it. Monday is a holiday. So there's a lot of stuff going on here. More for us hedging if reaction is ugly and vol stays bid versus how does that whole VIX complex unwind? Good question. We'll find out. More will be revealed. So now, right now we have VIX 20 and the VIX futures 20. Vol Trader had requested to look at this. Now, where was it? Now look at something. Where was it? Here it is. I'm surprised this doesn't look uglier.
I thought it would be at extreme.
Yeah, I'm surprised it doesn't look uglier. Which just goes to show that everything shifted. That's my takeaway on that.
Yeah, and obviously we're not at extreme yet, anyways, in terms of vol.
So I was also surprised to see that. I have to say, I was expecting it to look a little uglier. I have a VIX VVIX ratio chart somewhere, but VVIX ratio, VIX VVIX ratio down at 5.24 is usually when we turn. It's usually closer to the, here we go, closer to the beginning than the end. VVIX VIX ratio, when we get down here, we're near a bottom. And again, it's not an absolute value number, it's a relative number. It never is on these. Bottom, December bottom. So again, it's looking like a bottom is probably in. Where we go from here. You know, we saw, when was it, last Friday, whenever it was, we saw 100 and something point ripper from the bottom. Not saying it's going to happen today. I'm not saying it's not. I'm saying be careful. I think I covered all the high points. As always, I'll be updating, regularly wherever I update stuff. Chewy, you want to share some stuff with us? If you're still there, I know he said he
Unfortunately,
had something.
my chart's not ready, but I'll be posting it in the Discord here shortly.
Okay, he'll be.
I can start. I can start if you guys want.
Yeah, I do. I just want to ask him if he likes my Vatos Loco shirt because he's a bad hombre.
I didn't notice that until you said so.
You see that? You see that?
Can you dance the thing?
If the trading thing doesn't work out, I can join a gang. Okay. That's the plan. I think it's a good plan. Go ahead, Val. What do you got for us?
1 second. Let me share the screen and all.
Okay. Good morning, Danny. While we wait for him to get his stuff ready.
Okay.
You ready? Let me know. So yes, so here's this.
Yeah, there it is. Okay.
There we are. Okay, let me remove my stuff. Go ahead, you're up.
I'm on. Okay, so first off, yeah, the plain vanilla option layout is fully extremely put dominated. So if you look at the lower portion where the bars are, generally you see purple bars and green. Today you see only purple bars. So there's no there's like it's fully put dominated, like very extreme and rare in that sense. So a lot of times when this happens, it's also a propane kind of liquid that can ignite a short squeeze, even though it doesn't seem that something can happen like that. You need like a real Fugazi news or something, Trump friends come in and say, I don't know, we're going to save the world or pour money on everybody. But like very hard for the market to do anything to the upside, like anything. Okay. It's like it's very rare to see it. There's no transition between strikes which are put dominated, meaning they have more puts than calls per strike, versus strikes that have more calls than puts per strike. Generally, we have a transition somewhere in the middle. The blue line goes from minus to plus. Like a transition of sentiment from an open interest perspective, but there are none today. So limited expectations to the upside. Obviously, if my systems tell me otherwise, intraday or some news, then yeah, I'll play along. But from this perspective, there's no upside today. Now, yesterday, once we broke the 6,900, which is like for a couple of months now, very important level. Basically, the regime totally changed from positive gamma to negative gamma on the full complex of February. So and that basically entices the triggers a lot of selling from market makers as we know them, but a lot of other vol players and other stuff. So that level was pretty.
Quick question there: where does that curve bottom out there? Where the S curve bottoms?
It bottoms
50 about, well, 6,700, 67.
This is 60. This what the mouse is 6,700, so 6,750.
Okay, and that's where we have 20,000 puts sold if they hold them there. Just FYI.
Yeah. Now this profile is from yesterday.
Right.
We can update it later, but it's pretty much this is the case. So we're like totally net a negative gamma. Also, we can see this by the dominance of the put of the purple bars underneath. So this is the regime. So we have like strong selling when the market moves down and strong buying when the market moves up. Two levels are capturing my attention today. You can see this structure, which is pretty symmetrical around the 67, 80, 70 type of on the put side, and around 68, 75, 90 on the call side. Now, this also happens to be the expected move. Expected move pre-market was 60 points. So we were trading most of the time at 68.30 on the SPX pre-market. So that means 68.90 to the upside and 67.70 to the downside. That's pretty much what all the let's say all the synthetic straddles up to the CPI. We're trading around 68.30. So that's pretty much the range. And the candy wrap model, which shows us where the compression of volatility comes in and pretty much shows the limit up and limit down, so to speak, for days where you move through all the levels. Right now, yesterday I mentioned that the call side is compressed, but the put side is open, and it's still the case today. And this doesn't necessarily mean we have more downside, but again, this just adds, from another perspective, the limitation to the upside, unless some miracle trigger to the upside, from a sentiment news perspective. But other than that, the upside is still very, very limited today. Final notes: VIX 17 still rules. Anyone that wants to be there, wants to be alerted when we shift back to happiness and to the moon. So as I'm following this for the last 10 days, this has still not been breached. And I recommend everybody has a VIX 17 or VIX 16.8 alert, just to be aware of your situational awareness. And that day when it will alert means that all the downside is dead, and we're gonna rally for a couple of days. I doubt this will happen today, of course. Now, February 13, as I said, is very, very bearish from an open interest layout. So limited upside. And to the downside on my end, I identify some selling of puts at 67, 80, 70. So I think it's either where Doc mentioned or a bit above, but that's like that strike shines out even when I do the complex of February 13 up to February 20. That strike comes out as put sellers on my end of the systems. I don't have option depth, but I suspect that level to be significant and should hold a down move to it. If it doesn't and it fails, then we go to 67.50 or lower. This is how I see the day. And again, limited upside. So I'll just play it from a technical, like basic technical perspective. If we stretch up too much, I'll probably counter it. That's pretty much it.
That's it? That simple?
Yeah, pretty simple today because of that, of that dominance of the put. So it's not too much to analyze.
Okay, and let me get back to this.
There is one more thing. I don't know if any of you are following, but we are drilling into the into really low levels on the yield curve, and now with the soft CPI even more so. But we're really getting stretched from a lot of perspective on those bonds. So the bonds, in my eyes, are getting to a level where I might go short the 10-year. Yeah, it's getting a bit stretched. Like they're pricing in already, much more than the Fed will do in the next 6 months.
Okay, let me, okay, so while you were talking, I just ran the straddles again. I posted it in notes on Substack, because I just had it here, so I don't have to like look in three places at once. And so right now, or you know, a little while ago, straddle hasn't really moved that much. Repriced to 56, whatever, 55. You know, potato. 67.75, the bottom of the expected move. And the same thing we've been talking about is 68.95, the top of the expected move. Bears beware. Not saying it's going to happen. I'm saying don't short an overhedged market. I put Tuesday in just to see what Tuesday looks like. 67.40, that same bottom of the speed curve. And top takes us back to 69.30. Why does that number sound familiar? Oh, that was where we closed on Wednesday, whatever day it was. And next Friday, next week's straddle for options expiration, 66.95, 6,700, kind of the real bottom of that curve, and 69.75, basically the all-time high, is priced in for next Friday. Let's remember OG McMillan has warned us that 67.20, the December low, is a level to respect. So I'm paying attention to it. Like I've said before, I've been following McMillan for more than a quarter of a century now, and he knows what he's doing, you know. And he was an OG then a quarter of a century ago. So I just kind of wanted to point that out. I just want to show you one more thing, and then I'm going to turn this over to QE. And we'll be updating all this stuff real time, of course, in Discord and, you know, wherever. Okay, I wanted to show you this. So Val was talking about where the calls start. And so the calls actually start small. You have 500 call buyers at 68.50. We have call sellers here at 68.40, kind of at the money yesterday. But the calls are kind of trapped beneath these puts. Now, these are sold puts. This is positive delta. So I guess kind of makes the water even a little muddier here all the way up. But up here at 68.90, top of the expected move, like Val said, we have some call buyers. We have some call buyers here, not many, 500 here at 68.60, but we also have put buyers, so this cancels out. And so it's an interesting path. It's an interesting path here. Yeah, you have your charts ready, Bad Hombre?
Doc, that cluster of red where your arrow is right now, that cluster of reds and no, to the left, those three,
Yep.
yeah, almost symmetrical red levels. That cluster is basically short customer puts.
No, customer long, market maker short.
Customer long. So customers are starting.
Let me switch it. Let me switch it to customer view, because a lot of people don't do their brains don't reverse it as well. So here's where customers are long. Customers are long.
Starting
on the
where?
right side of the chart.
Yeah, what's that? Oh, 68.50 and under. They basically, so they have both longs and puts, but more puts. So let's say they start hedging 68.50 and under, right? Until they start selling some puts down there. And so in my view, like until we don't take out 68, 50, 40, 50, 60 kind of, that would be like the significant level in the morning. If we don't take that 68, 60 level, there is no upside. Like
Yeah,
this
so
balance.
here, and if we just look at it here, when we net everything out, you see from 68, 10, 20, kind of where we are now, up to 68, 75, but kind of starts slowing out here at 65, 60, like you said. There's just two-way ladder. Anything can happen.
Yeah. Yeah, I mean, and then the market is probably, people are careful. They don't know exactly what's going on. They saw the Bitcoin crashing and now suddenly the market. So, I think they're more cautious. Like you need to give them a really, really, really good reason to buy.
And also, that's why I said on Twitter yesterday and wherever I would listen to me, a lot of this, not all of it, a lot of this feels like a liquidity crunch. People who, Bitcoin covering, gold, silver, all that, bonds. People are leveraged, especially institutions. If they have to cover this or go along with that, then they have to get rid of something else.
Yeah.
And that just
Yeah,
makes it a whirlpool.
Yeah, but still, it's not like the Bitcoin is like where the collateral for the.
Oh no, I'm not saying it's Bitcoin. I'm saying we got a little bit of Bitcoin, a little bit of silver, a little bit of truckers,
Yeah.
a little bit of SaaS. We have a perfect storm, a little bit of VIX call hedging. We just happen to have a lot
All the
of
risk assets, crushing.
Yeah. We just happen to have a lot of bad little annoying things that are meeting up at the same time.
Yeah. Now, by the way, JP Morgan came out with this. I don't know if you showed it or not. Here, it's in your Discord, in yours and mine. You can show that.
Where is it?
In the Discord that you and I talk.
Okay, an hour thing, right?
The JP Morgan CPI thing, right?
Okay.
They're like very bullish on that report. I mean, they're seeing a 1.75 gain today on that report.
And it wouldn't shock me.
Well, I would be surprised, but again,
I mean, it wouldn't shock me to see 6,900 again. It would.
Well, yeah, 6,900 is 1%, but I mean, look at that number. That is like, that's a number, yeah. That's 6930, 6950.
But these guys tend to be wrong a lot.
Yeah, well, I mean, it was like it's very aggressive, right? They could have said, yeah, the market might go up 0.5%, which would,
My famous story for that is, this goes back last year. Sometime I was telling the story. Goldman Sachs put out a note last year, sometime I'm pretty sure it was, with the CPI or non-farm payroll. I forgot which one it was. Doesn't matter. And they said, whatever the number was, low probability, 10% chance of it coming in. If it does, we drop 1.5%, 2%. The number came in where they said low probability, and we shot up 1.5%, 2%. So they were totally wrong on the probability, and they were totally wrong on the direction.
Well, yeah, I'm the last one who, takes what they say, any one of those banks, right? I'm long enough in the market to know that, other than the fact that they don't have Abby Joseph Cohen, they have Tommy V, all the rest remain the same, yeah?
Yeah. Okay, so we're going to wrap it up here, but before we do, always have time for a little bit of Q&A. So if anybody has any questions or comments, whatever, and please comment, retweet, read, whatever it is. I was looking in the YouTube yesterday to answer any questions or comments, and there was nothing there. Come on, folks. If you have questions, comments, let's see them. Whose Avery are we sitting in? That's a good question.
By the way, Doc, I prepared, I have a working market making system on my end, which I can showcase. So if the audience would be interested, you can set it up, and I can demonstrate how that is priced, work, triggered, the whole thing.
Yeah, and I'd like to talk to you off screen and probably over the weekend about a number of things that we could do together, including maybe something like that as a separate YouTube, Twitter event or whatever, and a few other things. So yeah, I'm going to answer for everybody and say, yeah, they want to see it.
Yeah, no problem.
Can stocks go negative? That's a good question. That's a good question. Can stocks go negative? It wouldn't surprise me if we kind of undercut, and kind of went back toward that 6,800 area and then kind of got back up. So yeah, they can. I mean, remember, we're basically flat. Where did we close? At 68.32 yesterday. We're at 68.34 right now. So absolutely, we could. It wouldn't surprise me to see a retest of the overnight lows or 6,800 round number to get into here. Above 68.50, that's the real battle. That's only 15 points from here. So it wouldn't surprise me to see a print at 68.50 and at 6,800. Not sure where we end up, but it wouldn't surprise me to see a print there at all. So I wouldn't be selling 68.50 calls. I actually bought yesterday 68.50, 75, 6,900, something like that. I forgot exactly what fly I bought near the close. I'll be looking to get out of that relatively soon. And you see, it looks like we're about to go negative now. So there's still a lot of what's the word I'm looking for? There's still just a lot of uncertainty and nervousness in the market right now.
My opening level, by the way, is 68.25. So that would be like my bull bear opening level. If we're above that, we can go to your 68.50. If we're below that, we drop back to test the lows of the Globex. That's how I see it. 68.25.
6,800-ish, yeah, the lows of the Globex, give or take a couple points, yeah. Okay.
Wait, there's another question there.
People were stunned into silence. Yeah, the question, do we think we get above 68.50? We got that.
Yeah, 50-60 is like the resistance.
Yeah, that's kind of the stall pivot.
Yeah, you have it there.
Yeah.
So to answer that question, I think that if we were to get there, you'll have a lot of people seeing that as an opportunity to join the downtrend first and foremost. And if that will be taken out, then you can have some upside. But other than that, 68.50, 60 will be top of the range for the opening session.
Thank you for reminding me about Valentine's Day so I don't get in trouble this weekend. Thank you. When is Valentine's Day?
Tomorrow.
Tomorrow. I knew that. I was just testing you guys. Okay.
And President's Day on Monday, so markets close.
Yeah. Markets close on Monday. That's why when I did the expected move thing, I looked for the Tuesday straddle, which just kind of adds a whole nother layer of uncertainty. You have charts ready for us or no?
No, I put them in the Discord.
Okay, in the Discord. Okay, fine. All right, everybody. We're going to run. Thank you for paying attention and see you on the other side.
Goodbye. Good day. Bye-bye.